All right, the $1,400 stimulus checks are finally approved. And if you're wondering if you're going to get a stimulus check and how you should actually spend your stimulus check to build wealth, make sure you watch this video until the end. What's up, everybody? I am Jaspreet Singh from theminoritymindset.com, where money minds rethink rich. After the $1,200 stimulus checks were sent out back in 2020 and the $600 stimulus checks were sent out in early 2021, here we are with another $1,400 stimulus check that has been approved, that is about to be sent out. And if you're wondering who's going to get a stimulus check, well, they changed the income requirements. The plan says that you are eligible for a stimulus check of up to $1,400 if you make less than $80,000 a year and you file your taxes as an individual person. If you're filing as a joint couple, then you can make up to $160,000 a year and get up to $1,400. They say up to $1,400 because if you make less than $75,000 or less than $150,000 as a couple, then you get the full $1,400 per person. So if you're one person, $1,400. If you're a couple, then $1,400 each. But if you make more than $75,000 and less than $80,000, then the amount of money you're going to get is phased out. And after $80,000 or $160,000 as a couple, then you get zero. But here's the interesting thing, because before, if you had some kids or older kids that were in college, you weren't making any money. But now the new rule with the stimulus plan, if you have a dependent child, it doesn't matter how old they are, you will receive $1,400 per dependent as long as you meet the income eligibility requirements. So if you have two dependent kids and you and your spouse make less than $150,000 a year, then you're going to get $1,400 for you, $1,400 for your spouse, $1,400 for kid number one, and $1,400 for kid number two. So you got some nice checks coming your way. To see if you qualify, the IRS is going to look at your tax returns. So if you already filed your 2020 tax returns, they're probably going to look at that. But if you haven't looked at your 2020 tax returns and you've only filed your 2019 tax returns, then the IRS is going to look at that. So this is where some people are trying to find loopholes, because if you were making $70,000 a year in 2019 and then in 2020 you got a raise to $90,000 a year, you don't want to file your taxes yet, because if you do, the IRS is going to look at your 2020 tax return and they're going to say, ooh, this person makes too much money, no stimulus check for you. But if you just stick with that 2019 tax return and then you file your 2020 tax return a little bit later, now from what it seems, you should still be eligible for the stimulus check. So there's going to be a lot of gaming going on with this new stimulus check. And of course, although I am an attorney, I'm not your attorney. So if you have specific tax questions or specific questions, talk to a professional in your area. Now that this $1.9 trillion stimulus program has been passed, we're going to see a few things happen. First, we're going to see the devaluation of the dollar because of all this money printing. Second, we're going to see the US national debt go up even more. And we're going to see those $1,400 purses go on sale at Gucci and Louis Vuitton. There are 5 different ways that you can spend your stimulus check. And you need to really understand these 5 ways. That way you can spend your stimulus check the right way. You can spend your money on needs. You can spend your money on wants. You can save your money. You can pay off your debt. Or you can use your money to buy assets. I'm going to go over these 5 things. But before I do that, I need you to do me a quick favor and smash that thumbs up button below. And a quick word from our sponsor, Webull. If you are interested in investing in stocks, Webull is giving you free stocks just for using them. So if you want to learn more and get started, I got the link to how you can do that with Webull in the description below. The first way you can spend your stimulus check is by spending your money on needs. If you have a real need for your stimulus check, this is the most important place for you to spend your money. So if you're behind on your rent, you don't have money to pay your mortgage, or if you don't have money for your groceries, you're behind on your bills, this is where you gotta be spending your stimulus check. We have millions of Americans that are out of a job. We have tons of businesses that have gone bankrupt. And so we have a lot of people that are still financially hurting, even though it doesn't necessarily feel like we're in a recession, but we still are in a recession. And a lot of people are financially hurting. And so if you do not have money to pay your bills, or if you do not have money for your family to eat, the very first thing you got to do with your stimulus check is you got to spend your money on your needs. And this is where you got to really understand, though, what is a need versus a want. Look, you need food to feed your family, but do you need to buy a $14 gallon of soy milk from Trader Joe's? You need clothes for your kids, but does your kid need a $200 pair of Jordans, or can you get them something cheaper? So you got to really understand what is a need versus a want, because if you got the stimulus check, use it to buy needs. Things that you need to survive, not things that make you look cool. The second way that you can spend your stimulus check money is on wants. So this is where we have kind of a real disconnect between how I think you should spend your stimulus check and how the system thinks you should spend your stimulus check. Because the whole idea of a stimulus check is not for you to stimulate your wealth. The whole idea behind the stimulus check is for you to stimulate the wealth for everybody else in the world. Because as soon as you get this free money from the government, what does the government want you to do? They want you to spend this money. And when you spend this money at Walmart and Chipotle and Lululemon and Amazon, what happens? Well, Walmart, Chipotle, Lululemon, and Amazon get rich, but you are left with nothing. And so who are you really stimulating with the stimulus check? Well, when you get this money and you spend it everywhere else, you are stimulating everybody else, but you're not stimulating yourself. You only got stimulated for a minute when you got that check and you deposited it into your account, but as soon as you spend that money, you are no longer stimulated. Everybody else is stimulated, but you are not. So this is where you got to understand, what is the purpose of a stimulus check? Well, in the system's eyes, the whole idea behind the stimulus check is to stimulate the economy and to make the whole system richer. I want you to stimulate yourself. It is not your patriotic duty to live broke so everybody else can live rich. Okay? I'm sorry to say it, but that's the reality. I want you to look out for your finances first. So when you get this money, do not spend it on wants. Okay, that is the one place I do not want you to spend your stimulus check. Every time you see a stimulus check come out, what do you see happen? Well, when you get a $600 stimulus check, you see those $600 TVs go on sale. You see the $600 Gucci purses go on sale. You see the $600 Louis Vuitton belts and scarves go right in front of the store. And so you got to understand what's going on here. These companies know that once you got this money, people are going to spend it. And this is where you got to be smart. When this $1,400 check goes out, you're going to see the same thing happen. The $1,400 purses are going to go at the front of the Gucci store. The $1,400 Louis Vuitton purses are going to go in front of the store. The $1,400 electronics are going to be on big display, because when people got this check, they're going to want to spend it. But this is the one thing I do not want you to do with the stimulus check. I know it's like free money, and it's like, okay, let me go spend it. But one of the most expensive kinds of money there is free money, because there is a hidden cost to your stimulus check. I'll talk about that in just a second. But this is where you got to be smart. Do not blow your money and use your stimulus check to stimulate the rest of the world. Use your stimulus check to stimulate yourself and stimulate your wealth. If there are things that you need in order to be able to live your life and survive, spend your money on that. Spend the stimulus check on your needs, but the one place you should not be spending your stimulus check on is the wants. When you get the stimulus check, I want you to use the stimulus check to stimulate your wealth, not to stimulate everybody else. I know this is real kind of different thinking, but that's why we're called the minority mindset. We don't think like the majority of people. The third thing that you can do with your stimulus check, assuming that now your basic needs are met, you have money for food, you have money to pay your housing payments, and you don't spend this money on wants, so you don't go to the Gucci store and blow it there, is now you don't know what to do with this money, so you just put it in the bank and you let it sit there, because now you think, okay, I'm not going to blow this money. I'm just going to do the right thing and I'm going to put it in my bank account. Now, this could be good, but it could also be bad, because there's a right way and there's a wrong way to save your money, and it's going to become more important now than ever just because of all this money printing that's going on because of these stimulus programs. Look, the government doesn't have $1.9 trillion just sitting in a vault somewhere to fund these stimulus checks. I mean, that's why we're drowning in so much national debt. And so in order to fund these stimulus programs, the government works with the Federal Reserve Bank to print this $1.9 trillion. Then the Federal Reserve Bank is going to give this money to the government, and the government is going to inject this money into the economy through the form of stimulus checks and the rest of the stimulus program, because there's a lot of money in the stimulus program that is not going to stimulus checks, but that's a topic for a different video. But as more and more dollars, or what you and I call money, is printed, the value of each dollar that we have goes down. This is what inflation is, and this is why the cost of your groceries and your rent and your vacations and your healthcare costs keep going up. It's because your dollars are being diluted. The value of each dollar doesn't have as much buying power as it did 5 years ago, or 10 years ago, or 50 years ago. That's why your grandparents could go to the movie theater and buy a chocolate bar for 50 cents, versus now, well, movie theaters are still closed in a lot of places, but a lot of movie theaters are going to charge you $20 to go see a movie and get some candy. A lot of us, myself included, were taught that saving your money is the path to becoming wealthy. But the reality is that now, as our dollars are being diluted, each dollar does not have the same buying power as it did before. Now, saving your money is better than spending your money on wants. It is better to save your $1,400 than take your $1,400 to the Gucci store and buy yourself a new wardrobe. However, saving your money is not going to give you the full kind of real potential that your $1,400 could give you if you use it somewhere else. But you do need to save some money, right? There is a value to saving your money, but saving your money is not going to make you wealthy. The reason you should be saving your money is to protect yourself from emergencies, because guess what? Life happens. You need to have some savings in cash, meaning in the bank account or somewhere liquid, that way you can easily access this cash in case your car breaks down, in case your AC stops working, in case your furnace stops working. Because when life happens, you don't want to have to go into debt to fund this emergency. So you got to have some savings. If you don't have a very bare minimum of 3 months worth of expenses saved in your savings account, then you need to be saving this cash, because you are walking this thin line where if you don't have any savings, then when something bad happens, you're going to be forced to go into debt, whether it's credit card debt or a home equity line of credit, to fund this repair or this issue. You want to have somewhere between 3 to 12 months worth of expenses saved up in your savings account. And this amount that you have is really going to depend on you and your risk tolerance. If you really like the idea of investing your money and you want to be a little bit more risky because you want to see bigger returns, then don't save too much money. Then 3 to 6 months is where you want to be. But if you really have kind of a lower risk tolerance, then you should be saving 6 to 12 months worth of your expenses in a savings account, but no more than 12 months. Okay, so you got to have some savings to protect you from an emergency, but you got to understand that your savings that you're saving today are not going to have the same buying power a year from now, or 10 years from now, or 30 years from now, because that $10,000 in 30 years is not going to buy you what $10,000 can today, because $10,000 is going to have way more buying power today than it will in 30 years. So you just got to understand that, and you got to understand why you're saving your money. So if you want to save some money, fine, just make sure you're saving within your limits, and you got to understand why you're saving your money. The fourth way that you can spend your stimulus check is you can use this extra cash as a bonus to pay down some of your debt. If you have a car payment, or if you have a mortgage, or if you have some credit card debt, this is an easy way for you to just get a little bonus on your debt pay down, because you're getting this check, and if you don't need it here, or if you don't need it here, then you can use this money to pay down your debt so you owe less money to your bank. The question that everybody asks here is, okay, I'm paying 3% a year on my mortgage, and if I invest my money, then maybe I can get a 4, 5, 6, maybe 7% return on my money, maybe more if I'm better at what I do. And so should I pay down my debt, or should I invest my money? Because if I pay down my debt, I'm not getting the best return on my money. And the answer here is, again, it's going to depend on you, and it's going to depend on your risk tolerance. When you pay down your debt, you're getting a guaranteed return on your money. So even if you're talking about a 3% a year mortgage, if you pay down another $1,400 on your debt, that is a guaranteed 3% return on your money, because if you pay off your mortgage 1 year early, that's 3% that you don't have to pay to your bank. And so when you pay down your debt, it is a guaranteed return on your money. But when you invest your money, whether it's in stocks or real estate or cryptocurrency or commodities or whatever it is, you don't get a guaranteed return on your money, because there's a chance that when you invest your money, that your investment will go down. And so yeah, you can make more money when you invest your money in the stock market, but there's also a chance that you won't make any money. There's a chance that you're going to lose money. And so there's a lot of kind of uncertainty here, versus when you pay down your debt, there's no uncertainty. And so this is where you got to make that decision for yourself. Are you okay with that uncertainty? Yes, no. And the second thing you got to look at is, what kind of debt do you have? Because if we're talking about credit card debt, for now you have 12%, 15%, 17% APR on this money that you're borrowing from your credit card, then it doesn't make sense for you to be investing your money. Right now, you should be putting all of your money, all of your extra cash to paying down this credit card debt. Because when you're paying 15% a year to your credit card company, your credit card company is skinning you alive financially. And so you should use this money to pay down your debt before you use any of this money to invest your money in stocks. And the fifth way that you can spend your $1,400 stimulus check is by using your money to buy assets, investments. An asset is something that you buy for the purpose of making money. When you go over to Amazon and you buy $1,400 worth of stuff, Amazon makes money and you get stuff. But when you take this $1,400 and you invest it into the Amazon stock, now you own $1,400 worth of the Amazon company. So when people spend their money on Amazon, now you get the benefit, because when more people spend their money at Amazon, the Amazon stock becomes more valuable, and now you become wealthier. If you already got your needs covered and you have some savings and you don't have any super high interest debt, then putting your money into assets is the best way to go, because now you are really investing in your long-term wealth. If you have high interest debt, pay that off first. And if you have low interest debt, then you got to figure out your risk tolerance. But either here or here, you're going to be good. But you want to put some money into your assets, because this is what is going to make you wealthy over the long run. And if you're really talking about stimulating your wealth, Now you're using your money as a tool to make you wealthier because you're buying assets. You're buying things with the purpose of making you more money instead of just buying things for the purposes of making somebody else money. The reason why buying assets is more important than ever goes back to all this money printing that's going on. The value of our dollar is going to go down, and we're going to see a lot of this money flow into corporations and companies because as people get this free money from the government, they're going to spend it. A lot of people are, at least. And as this money gets spent, it flows to corporations and big companies. And then when these big companies make this money, they're not going to just give it away. They're going to reinvest this money back into themselves. That way they can keep that money, because when a business has money, they don't want to let go of it. So they're going to keep it. Now, when this money flows to the top, you're going to see a bigger concentration of wealth by the 1% and the people that are financially educated. And you're going to see a smaller concentration of wealth for everybody else. So now this is where you got to be smart, and you got to really start being a producer rather than just a consumer, because anytime you see more money printing, you see a bigger divide between the rich and the poor. And so now you really got to get financially educated, because if you don't, you're going to be the person that's getting financially abused by the way the system works. So you really need to be using your money as a tool now to buy assets, because assets are things that as more inflation happens, your assets are going to go up in value and hopefully even grow faster than inflation, because you're buying something that is producing more value. If all of that was really confusing, I broke it down in another YouTube video where I explained why Walmart CEO and other big CEOs were begging for a $1,400 stimulus check. So if you want to learn more about that and watch that video, I will link it for you in the description below. But the thing that you really need to understand here is that the whole purpose of buying assets is to spend your money on something that's going to make you money instead of just spending your money on something that's not going to make you any money. There's a few different ways that you can go about doing this. You can invest your money in stocks. That way you can own a piece of the companies that are selling products. You can own real estate. When you own real estate, you own something that you can see, feel, and touch. And when you own real estate, you can also get some cash flow because someone's going to be living in your property, paying your rent. You can invest in cryptocurrency if you believe that cryptocurrency is going to have more value in the future. You can invest in your own education. You can buy books, you can buy classes. These are things that you're buying to help strengthen your mind and understand more about money and how to use your money. That way you can build your own wealth. All of these things are assets, because these are things that you're buying for the purpose of building your wealth instead of just making everybody else rich. When you do that, you're really shifting your mindset from being just a consumer to being a producer, because the people that make the most money in the world are not just the people that buy everything, it's the people that are producing the value. And when you are an asset owner, you own the value production. So as more value is created, you benefit because you are the person that owns a piece of the value. When you invest in Amazon, you own a piece of Amazon. So as Amazon creates more value, you benefit because when Amazon is worth more as a company, you are the one that owns the shares that are now worth more. If you enjoyed this video, here's the video on stimulus checks that I think you'll love. And while you're at it, download our free ebook on investing. And as always, keep hustling. But now, you started off with $2,000. Then you go to the mall and you gave away all your $2,000, and in exchange, you got yourself some nice things. But now you don't have any more money, and all you have